it's funny. You are live, Severin. Welcome to the talk about Bitcoin and all other. It's you now.
Thank you very much, Maria. Thank you very much. Good. Welcome all to my Bitcoin talk here. The stream will be also on Facebook after. It'll also be streamed right now into the lounge from the co-working Bansko. And these are the talking points for today. So first I will talk about Bitcoin stakeholders, like what are the main stakeholders in the whole Bitcoin system. And then we will talk about general what is money, to get a kind of a feeling of like what are good attributes of money and what are bad attributes of money. Then we will evaluate Bitcoin in the context of money. We will see what the current problems of Bitcoins are at the moment and what the future promises. And at the end, we will make a small quiz to with the person who wins the quiz will win this one physical Bitcoin. And we'll have one physical Bitcoin here in the basement, and we have one physical Bitcoin in the lounge. And probably there are less people in the lounge. So if somebody is really eager to get this Bitcoin, you probably should move to the lounge because the chance is higher to get this Bitcoin there.
When you say
this is not $57,000. In case you're wondering if this is an actual Bitcoin.
It's worth €9 from Amazon, but you can imagine 60,000 almost.
Yeah.
At the moment. Some disclaimers. Cryptocurrencies. This is a big topic. I will only focus on Bitcoin itself. I will not focus on all other cryptocurrencies like Ethereum, because one can do like 4 or 5 other talks about all the cryptocurrencies. This specific talks only scratches the surface. I will mostly focus on the financial narrative around Bitcoin and will not go deep into the technical things. And also, this is not investment advice. If anybody invests in crypto because of me and loses all their money, I will not take responsibility. Just so that I said, please don't listen to me for financial advice. Good. And also, if you have any questions in between, just raise your hand and I try to answer the question also in between. It's not an easy topic, let's say like this. Good. First about me, I'm Severin. I'm a software engineer from Switzerland. I worked as a technical product manager in Switzerland in a startup. We built up AIMO. AIMO is an advertisement platform for advertisers to put advertisements in mobile apps. And we had like the biggest Swiss mobile news apps in there, and we're pretty successful. After my exit, I went digital nomad now for 2 years already, and I'm doing now freelance projects and independent projects just for myself since 2 years. Good. What is Bitcoin? What are like? How is Bitcoin built up? What are the main stakeholders of Bitcoin? So first, on the left side here, we have the user. The user plays a role here in the whole Bitcoin system. Then we have a distributed network of Bitcoin nodes. These are basically Bitcoin servers distributed all over the world. And here we have the miners. And the miners in Bitcoin, they keep the Bitcoin system up by providing so-called proof of work. We will see after what this means. To see how this whole system interacts here, we have the user here on the left side. If he sends a transaction, let's say A wants to send 1 Bitcoin to user B. So he sends this transaction into this distributed network in here. And the distributed network here. This distributed network here of Bitcoin nodes takes this transaction and sends it to the miner. And these miners, they gather around 2,000 transactions every 10 minutes or so and try to solve a very difficult mathematical problem. And this difficult mathematical problem up here, this makes sure that one block every 10 minutes is mined. So it's basically a competition, like all these miners try to solve this mathematical problem, and every 10 minutes or so, this mathematical problem is solved, and we have a new block, like a new official list of around 2,000 transactions that are approved every 10 minutes. And then the miners send back this block into this distributed network here of all the Bitcoin nodes. And important here, the miners, because they solve like this very difficult mathematical problem and also use a lot of energy for this, they get a so-called block reward, which is at the moment is 6.25 Bitcoin for each block they solve successfully. And that gives the miners the incentive to create this problem, solve this problem. And then the transaction has been confirmed and the money went through.
This reward, where comes this from, like this 6.2 Bitcoin?
This is newly created Bitcoin. It's literally newly, you can say almost a newly printed money. Is this. I will come back to this later when we talk about money printing in general.
The amount that the miners get as a reward, is it adapted to how much Bitcoin is worth?
No, it is adjusted. So we'll also come to this later. It is continually going down, but it's not adjusted how much the money, the Bitcoin is worth. Good. What's important in here, there is no government or bank involved. There is no third party involved. Like nobody is there and can say, you can't transmit this transaction, or you can't pay this guy because he's a terrorist or whatever, or you can't pay this guy because he's politically not really convenient. It doesn't work like this. Also because this is a distributed system of X thousand of nodes. If one server just dies or has a hardware failure or something, this doesn't impact the system at all. Like it just continues to work as long as 50% of these nodes here work without getting hacked or whatever, then the whole system works without a problem. And here we have, there are 21 million Bitcoins available over the whole system. So even though like every time the new block is created, new Bitcoin is basically created, like you asked before, at the end, there will be 21 million Bitcoins, and at 2,140, there will be no new Bitcoin created. So it's a fixed cap.
So what's happening now?
The miners will mostly be paid by fees. So you pay a transaction fee every time, and they will be paid by the fees mostly. But that's like far in the future. We'll probably see a lot of changes to Bitcoin until then.
It's likely that by then either Bitcoin will no longer be used, or Bitcoin will be worth so much that just a tiny transaction fee will be like super high, and it will still be worth mining because of that.
Yeah, a lot of possibilities. Good. What is money? Money is basically something, an exchangeable good to help to trade. So, for example, let's imagine some Stone Age guys, one with apples and one with a kettle, and one guy wants an apple, but the guy who wants an apple only has a kettle, so how to pay the apple guy, it's a problem. We can't split the kettle and pay with half a kettle. And also, it would take a huge amount of apples to get one kettle. And we have a problem here with apples because the apples, they tend to rot after a week, 2 weeks. So it's a bit of a problem to have apples and use apples as a payment in here. The same thing, like there's a lot of things that have been used as money in the past. So, for example, salt was a thing that has been used as money. There were, like in Indonesia, especially in Bali, there were seashells. Like seashells, there were different type of seashells, and depending on the size of the seashell had more value. And it was very interesting. If cigarettes in prison, for example, has been used as money. Also in World War II, the Americans used cigarettes as money. Then we have silver, gold, and right now we have so-called fiat money, like government money, basically. Government prints money, and we use this piece of paper to do all the payments today. Different currencies, different problems. This here is a list of attributes that good money should have. Good money should basically be generally accepted. So when I go to a store and bring him a chicken as money and want to pay with chicken, then the store owner will look at me and like, no, this doesn't work. This is like, we need something that the owner of the store actually wants. This money should be durable. Like a problem with the seashells of Indonesia was that they tended to break. And that's pretty bad because when your money breaks, then your money is gone. It should be divisible or divisible. So the example with the kettle, you can't split the kettle in different, like smaller things to trade with it. Like we have currency, we have the 10 leva note, we have the 5 leva note, we have the 1 leva coin, and we can exchange these goods to go back and forth. And this this money should be divisible somehow to make up for like different things you want to, different values you want to buy. The values should be stable. That's an important thing. So today's money in summer should be the same value as the money in winter. So, for example, if we have apples, and we'll see that the value should be stable, and the value should also be stable in the future. Like if I have 1 leva today, the same leva should have the same value in 100 years. It won't be good, like into the future. The things should be transportable. So when I go to Sofia, it's very bad if I want to get an Airbnb and have to pay the Airbnb if I need to bring like a basket of apples. It's not really convenient. So having something that's small to put in a wallet is pretty good. And at the end, we have the money should be scarce. That means nobody should be able to make more of this stuff. We will go back to this in a later slide, where I'll show you what current governments are doing with money printing. Here we have some more example, like apples, they rot. That's bad. It's not divisible. The value is not really scarce. It's like everybody can just plant an apple tree and get more apples. And the availability differs in season, which is pretty bad. Also not transportable. Seashells tend to break. Cigarettes, we have a problem at some point. Also, they are getting bad. They rot. And metals like gold, they're actually pretty good. And there was also the money we used a lot in the last 200, 300 years or more. I have no idea. Because they're durable, like the same coin, metal coin, is today is the same as the metal coin in 100 years. They are divisible, so you can basically have half a metal coin, and transportable. You can put them in a wallet, and the supply is limited. Good. We come to fiat money. So the fiat money is the money we have today, like euros, US dollars, Swiss franc. But the fiat money today is basically just a piece of paper. And behind this piece of paper, there are usually, there's sometimes gold, there are stocks, there are other valuable things. That is all managed by the central bank of the country. So the European Central Bank for the euro, and the other central banks. The problem is with the fiat money doesn't have a fixed value. It represents what the government wants. Also come back to this later. But otherwise, it's pretty good. It's divisible, it's transportable, the value doesn't really fluctuate between seasons. Like today, one leva is the same as today of tomorrow's leva. It doesn't really rot the money. And which is also good, cash is pretty anonymously. So I can give you $100 or 100 leva and nobody will know. So there's a kind of anonymity in cash payments, which is pretty good. The problems with the current fiat system is the banks can just refuse your service. Like if no bank wants you, you're pretty much screwed. It's like you can't use ATMs then. You basically have to have all your money back home or so, like where it's susceptible to get robbed. Yeah, it's pretty bad. Then there are lots of regulations. You will see as soon as you start buying crypto, you will see that there are lots of regulations. For example, Julia wanted to buy Bitcoin on Coinbase. Coinbase is a crypto exchange, and she wanted to transfer money from her Revolut bank account to Coinbase. Revolut just refused to do that.
Actually, Revolut should allow Coinbase because they allow like 3 exchanges: Gemini, Coinbase, and another one. So if you show them a support, they should solve it. I had the same problem with Gemini, but eventually went through. Sorry.
Yeah, no problem. So the point is, like there are a lot of money laundering regulations. There are a lot of regulations there and there and there. So it's not really given that your transaction will go through. And yeah, governments can create as much money as they want, and that's the next point I want to go into, and that's money supply inflation. And I will make an example here in this money supply inflation, and this example is now the co-working Bansko dollar, which is given out by Svetlina. And so basically, money supply inflation is basically a general increase in price and fall of purchasing power of money. So what this basically means is my 10 leva today, they can buy a sandwich, and tomorrow my 10 leva can only buy half a sandwich, just as an example. And I will show you how this is done, like how this money supply inflation is done by the people who give out the money, like mostly the central banks. So we have Svetlina, who gives out a co-working Bansko dollar. And what we make here is there's a supply of 10,000 co-working Bansko dollars. And these 10,000 co-working Bansko dollars, to give them value, these 10,000 are worth one pile of gold. And we are having Julio here. He's not here. We're having Julio here, which is a member of co-working Bansko, and he owns, of these 10,000, he owns 1,000 co-working Bansko dollars. And basically with his 1,000 co-working Bansko dollars, he basically owns 1/10 of this pile of gold. That's pretty good. You can pay stuff, everybody's happy, you can pay the owner of the next shop here. Now, there is this thing. Maybe Svetlina and Matthias, they make a deal. Hey, why not print another 10,000 co-working Bansko dollars so that there are 20,000 co-working Bansko dollars suddenly, and yeah, use this 10,000 for ourselves. And Julio would still have just 1,000 co-working Bansko dollars. He would not even, like, most of the time, he's not even aware that Svetlina now printed 10,000 more co-working Bansko dollars. So he's 10,000 co-working, he's 1,000 co-working Bansko dollars. They're now only worth 1/20th of this gold pile. Now Matthias has 10,000 co-working Bansko dollars, created basically out of thin air, out of nothing. He owns now half of this gold pile, and he's gonna buy a lot of cake. He'll be happy. Do you understand this principle here? It's a very important one. Maybe something additional. Money supply is not the only factor in inflation. That's important. It's like if there is inflation, it's not always because the government printed money. There are other factors, but this is, in a lot of cases, this is a big one. So, why is inflation bad? I have some examples here of inflation, like everyday inflation. Probably everybody knows that $100 in 1950 is now worth around $600 in today's money. Like this, like around money like continually loses its value over time, so like fiat money, because governments tend to print always a little. We had hyperinflation in Venezuela in 2018, and the Bolivar, the Venezuelan currency, lost half of its value every 3 months. So if you have a bank account with 100,000 Bolivar on it, like every 3 months, these 100,000 Bolivar would halve in value, which is pretty bad if you have a lot of savings, especially if you have savings in Bolivar, like everyday people, for example. The thing is, this money printing destroys savings of regular people, because the wealthy usually have their money invested in assets, like in real estate or in company stocks, and usually like the people with savings, the small man that has savings on the side, and especially hits these people with inflation, with this lose in value. It's also an interesting point of view if you look at it from an equality standpoint in a society. And also, last example, World War I and World War II was mostly financed by money inflation. So the governments at some point they didn't have money anymore to do wars, and they just printed more money, print. That's one reason why these wars were so long, like over 4 years. Usually, a lot of wars before were way shorter, because at some point the governments run out of money. They try to ask their people, but the people would say, why should I pay you money to make more war and let people die, like that. Major currency exchange rates compared to the Swiss francs. So the Swiss franc is one of the more stable, or one of the most stable currencies on the planet. And what you can see here is how many Swiss francs you get for $1 US over time. It's basically the exchange rate US dollar Swiss francs. And what you see here is from around 1980 until now, we have a drop of 4 in the value of US dollar. So the amount of Swiss francs you get for $1 US dropped by 4. And to make like a more closer and recent example, here we have the Turkish lira. the Turkish lira. Like we had a lot of co-working Bansko people that went to Turkey, to Istanbul, and discuss for a trip in autumn because it was so cheap, because their currency just went downhill and they didn't adjust the prices yet in the hotels in Turkey. And what we see here in the last 10 years, where they dropped by 6. So if you had savings as a Turkish, you are pretty much screwed. And let's see if they stop printing money or just continue down here. Let's see. Now I want to come back to Bitcoin. I want to show you is the stock to flow ratio of Bitcoin. So the stock to flow ratio, so first for gold, the stock to flow ratio is a measurement of how much for example, for gold, how much gold there already exists and how much gold gets produced every year. And I want to show you the stock to flow ratio to compare Bitcoin with other things, like with US dollar and with gold and other assets we have. And so, for example, at the moment we have 177,000 tons of gold produced on the whole planet, and every year there is 3,000 tons of gold that gets mined newly, and that makes 1.5% change year on year of new gold that comes in. So the stock to flow ratio is more or less it's 1.5% year on year change. And if we compare this to the US dollar, Swiss francs, gold, the US dollar it's 24.5%. I've taken an average between 1984 and 2021 here. The Swiss franc we have 12.2%. And with gold is actually very good with 1.5%. And Bitcoin at the moment has 1.82%. And this is one of the reasons why Bitcoin is a store of value, what they say, or e-gold. Maybe you've heard something like this. Because when you put money in Bitcoin, and also when you put money in gold, the value there will not drop as easily because nobody can influence the supply, the gold supply, really, or the Bitcoin supply. And what is interesting with Bitcoin is this year-on-year change, this money supply, this newly printed Bitcoin, this drops every 4 years and it halves every 4 years. And it's doing this until it is zero in 2140. So basically the inflation, you can't really say inflation rate, but the money supply, which is like the miner block reward they get, the new Bitcoin created, gets lower and lower and lower until it is zero. And that's a very good thing from a store of value perspective, because nobody can really change that. It's like there's 21 million Bitcoin, and that's it. So at the moment, Bitcoin is as good as gold, more or less, you could say. But in the future, Bitcoin will basically be better than gold as a store of value if you look at it from this perspective. What I want to show you right now is how this influences the price of Bitcoin. This is a chart of the Bitcoin price. It's on a logarithmic scale, so it's not linear, because you wouldn't see this with a linear scale. And here, these lines here, these are when the halvings happen. The halving is when the block reward for the miners halved. So like it's at this point, like suddenly the stock to flow ratio, or the amount of Bitcoin that miners get, gets halved. Like it was 12.5 Bitcoins before for every block they got. And here, this thing here, it got halved to 6.25 Bitcoins. And what you see here is after every halving, Bitcoin tended to rise. See here, after every halving, Bitcoin rose. And here, we are around here now, Bitcoin is going up again. So these Bitcoin hypes or Bitcoin bubbles or like Bitcoin market cycles, you can predict that. It's all every 4 years because the amount of Bitcoin that gets created halves, and that's basically a supply shock, more or less. And you always have almost like, you can maybe say bubble, but you have like a bit of overconfidence here, and then at some point you have a top, and then you have a correction. Up, top, correction. Up, top, correction. And we will go up, we will have overconfidence, we'll have a top and a correction again also in this cycle. But what you see here clearly is that basically if you hold Bitcoin long term, it will go up. It doesn't go up as steep as here at the beginning anymore, but it will continuously go up until it reaches a stable level at some point. That's what is predicted. Here are the year-on-year changes of Bitcoin from production to what Bitcoin is available. Question to this? You all got so sound suddenly. Good. I will come back. No, I will leave now the Bitcoin and money comparison and go now into the problems of Bitcoin, what the current problems of Bitcoin is, and what the future will bring with Bitcoin. So current problems of Bitcoin, as you probably already felt a little bit, is the ecosystem is not really to use. Like, how do you buy Bitcoin? How do you transfer it? Everything is relatively complicated at the moment. And what I like to do is always to compare this to the web in the 90s, the World Wide Web. Like this was Yahoo to search sites. It was basically just an index of websites. It was not even a search engine at the beginning. And it feels like this at the moment to use crypto, and it will continually get better, but it probably takes another 10, maybe 15 years to make it like really usable. Other problems is, who knows, hacker attack. Like the system is already is only 12 years old now, Bitcoin system. Maybe in another 12 years at some point, Bitcoin will be hacked. Who knows? Like, it's possible. Chances are low because it already survived 12 years of hacker attacks, but who knows? It's a young system. Also, a problem is if you send money to the wrong address, then your Bitcoin is gone. Like, very different to banking today, where you can send stuff into the wrong address. If it didn't arrive, you can call your bank and they will try to do everything to get your money back. It's not that easy to use, and maybe a little bit anxiety provoking to use sometimes. Always double check the address when I send big money from one wallet to another. The price is volatile, like it's like not stable, but as you saw this with the chart before, it should equalize, like be more stable at some point, or it probably takes still some time. Important transactions are traceable so far. We'll see, we'll go back to that in a minute. One big problem is there are around 5, maybe to 7 transactions per second. It's around 400,000 transactions that are possible per day. And that's a big problem, because if everybody on the planet would just pay 1 coffee a day with Bitcoin, then we would have 7 billion transactions a day. So Bitcoin can't handle the masses so far. It's just not possible. We have relatively high transaction fees at the moment, around $20 per transaction, which is also not nice. Paying a coffee with $20 transaction fees is pretty bad. And the coffee is only worth, let's say, $2 leva. And also, Bitcoin has low transaction confirmation speed. That means if I send a transaction to Elena, for example, then she sees that I sent the transaction, but the transaction is only confirmed in, let's say, 30 minutes. It can also go up to several hours. But yeah, this is not good, especially when the coffee gets cold. What is the future? So tools will get better with Bitcoin. Like I told you, with the comparison to the World Wide Web in the 90s, tools will get better. We are having the Lightning Network. So there is a technology in development for Bitcoin that should solve a lot of the problems of Bitcoin of today. This Lightning Network will be able to handle more or less unlimited amount of transactions. Some keywords, but more or less. The transactions will be instant, like bam, milliseconds, and the fees will be around 1 cent, maybe even lower. And this will solve a lot of Bitcoin's problems, what it has right now. Anonymization is in discussion. Maybe it will come, maybe it will not come. We will see. But if you want to pay your drug dealer with Bitcoin, maybe don't do it at the moment. There are other cryptocurrencies that are able to make payments anonymously, but don't do it with Bitcoin. At some point, you will get screwed over. The bubble will burst. Bubble is maybe not the right word, but the market cycle will top and then come back to a lower price. And what is also sure, the next market cycle will start in 2024. Like as soon as the Bitcoin supply is halved again, there will be a rise in the Bitcoin price again. Conclusion. Is Bitcoin storage of value or money? Like, these are the properties for good money, which we discussed in the beginning. Fiat is actually pretty good. Problem is it's not scarce. Everybody can just print money, and or the government can print money, and therefore devalue your money on the bank account. That's the big problem at the moment of money that is out there. And Bitcoin now is durable, it's divisible, it's transportable and scarce. But at the moment, the value is not really stable, which is not really good. It goes up and down, and it's generally accepted. Probably everybody would take Bitcoin at the moment, but also everybody would need to take a course of 1 week to learn how to use Bitcoin. Probably nobody, or let's say only half of the people in here know. No, let's do it a question. How many people, if I would try to send you Bitcoin at the moment, how many people in here, or who would be able to accept and receive Bitcoin within half an hour? Hands up. Okay, yeah, half.
You would ask me. And you would be able to in half an hour.
So this generally accepted, everybody would take it, but for a lot of people it's really hard to take it because they don't know like how to do it.
It's like I would take it if someone wants to buy my car, but I would not take it if someone wants to like buy a coffee.
Yeah, but that's
It's like
that's because of the transaction fees mostly.
Exactly,
And
yeah.
It takes like, so long. and
Yeah.
it's-
it takes long. It's like so
Exactly. And Bitcoin in the future with the Lightning Network should solve all these problems. Like the generally accepted part will be better because it's easier, the fees are lower, and it's instant, the transaction, and the value will be more stable in the future, or will get more stable. And yeah, Bitcoin in the future should tick basically every box of good money. And that's the promise of Bitcoin, the promise of good money.
Can you define future? Because future is very open. It
You
can do in 100 years, can be next year. When can
okay, yeah.
just
Um,
define future?
Okay, I believe the Lightning Network will be ready in 2 to 5 years, somewhere in there. The tools will be way better in, let's say, 5 to 10 years. And the only question mark I have is the value stable of Bitcoin. But I personally believe the value will be pretty stable in the next 4 or maybe the next 8 after 8 years.
After 2 cycles.
After 2 cycles. Probably, but we'll see. Other people have other opinions about this. This is very
For sure.
personal thing.
I've got a couple questions. Just before, when you mentioned with the graph and the cycle, if people always know that on that 4th year it's going to go up, why does that not create a peak before that 4th year? People, because I guess the peak grows as people buy. So what's stopping people buying? Why does that peak not?
Why is it not calculated
yeah.
into the price? Basically, what you were
Yes.
asking already. That's
Kind of. I'm sort of meaning why do people wait that long?
mhm.
When people are guaranteed a return.
There was a discussion we had recently on the slopes. It's not sure. Maybe it will, because now of the 3 cycles, we now, where is it? Check. Oh, here we go. Of the 3 cycles, now we have the knowledge that this pattern is happening again and again and again.
Okay.
Maybe it will be calculated in.
So there was a peak in 2018.
Sorry?
So there was a peak in 2018 because I guess people realized that it was likely to go up in 2 years. Or,
Yeah, I think I have a little bit of a theory about this. So I think one of the reasons is that, so there's a lot of kind of investors or institutional investors, at this point even PayPal apparently, that buy up every Bitcoin that's mined, right? So not even the ones that are currently in supply, but all the new ones that are created. They're buying them up at current prices. And whenever the amount of Bitcoin that's mined is halved, if they still want to buy all the Bitcoin that's mined, that basically means they have to pay twice as much for that amount. And so even if the rest of the Bitcoins like that are being traded follow whatever you say, like they're already predicting that this is going to happen, etc. Just the fact that those people who want to buy all the newly mined Bitcoins have to basically pay twice as much, it still basically guarantees a doubling in price.
Yeah, that makes sense.
Because of that.
And then also, aren't Bitcoin split up into Satoshis as well?
Yeah.
So then, when they're all mined, or even before then, I guess, I think you were talking about them being worth so much that you have such a small transaction and still be able to buy quite a large thing. Isn't that the same as inflation if they can just change the value of the Satoshi, or because it's like 1 million makes 1 Bitcoin, isn't it?
Yeah.
So
So
can they not change that?
no. So 1 Satoshi is always, so 1 Bitcoin is always 100 million Satoshi, and will always be. What they might do is, so on the Bitcoin network, there don't exist Satoshis. There only exist 0.000000001. I don't know if I have said enough zeros, but there's only like floating point. Like there's I don't know what's the English term for it. There's no Satoshi. There's just 0.0 Bitcoin basically, and
Small currency. There is no small currency.
yes, there's no small currency. It's not Satoshi is not its own currency.
Right.
And at some point, maybe they decide to do like 2 more zeros that you're able to put into this number.
Yeah.
And then you would basically have Detsi Satoshi, like just like smaller. You can divide it smaller.
Because that's infinitely divisible if you're working with like a decimal of or percentage of Bitcoin.
At the moment, it's only divisible to Satoshi.
Right.
To 1 million, the 100 millionth of a Bitcoin. And maybe in the future they will change this and make it more.
Okay.
I am kind of surprised that you didn't touch on this. I think what I consider the biggest problem with Bitcoin, which is the energy use, right? Like for this proof of work, that right now Bitcoin is almost reaching 1% of the whole of the energy used by the planet, which is simply insane. Like this is more.
The vast majority of it is excess energy. So, for example, most of the miners are in China, and these, let us say, hydroelectric dams running 24/7, and they just have this excess energy that they really can't even transport. The wires can't hold it. They 4 a.m. in the morning, just no one's using it. It's just wasted. There's nothing really to do with it. And so Bitcoin miners have really taken over what smelters used to do back in the day, which is put them operation right next to these places where you have excess energy. And you see them in the old days where it's like literally burning off the energy. And use it that way. So it's not like a lot of people try and equate energy use to like greenhouse gases, but there's not that direct comparison because this energy would be created and just would literally be wasted. Otherwise, it's
not
the most
really that
part.
way. So like there's so many different ways we could use this. This is not only energy, but this is a computational energy, right? And we could use it for sequencing DNA, or we could use it for mapping a galaxy. Or
can I give my input here? So I have 2 things here. First, if you compare it to gold needs to be mined. And gold is only mined because gold has so much value. Gold is not really used or not a lot used in the industry. Gold is just, the main usage of gold is store of value. And gold mining currently uses 3 or 4 times more energy than Bitcoin mining. So it's just to bring you this a little bit into perspective that we basically already have this just with gold. And the other thing is at the moment there are other algorithms, proof of stake, maybe you've heard of it.
Yeah, sure.
And other cryptocurrencies are trying out proof of stake at the moment. And I have a feeling that, and also like what I heard from Bitcoin developers, that as soon as proof of stake proved itself over time, that Bitcoin will probably also move to proof of stake. And then it might change. Or then it will change with energy consumption. Sorry?
There were already conversations about this before to move Bitcoin to this, but I don't think this will happen. And
Bitcoin is very conservative. Yeah. It's like, because if they screw up only one thing, the whole value of Bitcoin could be just gone. So keeping up proof of work maybe for another 10 years is worth it in a sense to just see how proof of stake proves itself in like other cryptocurrency projects. And as soon as they see, hey, it's something that can't be hacked, it's something that it really works, then I have a strong feeling Bitcoin will also move to proof of stake. But it just takes some more time.
Who chooses how that happens?
It's
called.
No, it's you have how the system is built up is that you need a large amount of the nodes in a distributed network, the one I showed you at the beginning, and a large amount of the miners to adapt every change. And they basically have voting power by upgrading their servers onto the new software. As soon as 50% of these miners and nodes upgrade to a software change, then the software change is applied. So basically, these two pools have more or less voting power to approve new things.
Okay, but who makes the new software, or where does that?
It's a consortium that proposes like Bitcoin improvement proposals. It gets discussed, and then they try to implement it and convince everybody to approve this. It's very decentralized. It's not that there is like a single leader like in Ethereum with Vitalik Buterin, yeah, whatever with Ethereum. It's like really, it's a consortium.
Yeah. Okay.
If there are going to be halvings every 4 years until 2040, why would the value stabilize before then, before we reach the point where that's it, that's the last Bitcoin mine?
Because this is a big difference from 14% year-over-year to 7% year-over-year. This is, also a difference. But at some point, if it drops from 0.2% to 0.1%, that's not a big difference anymore. It goes from nothing to nothing.
So at some point, investing in Bitcoin will become a little less interesting because it probably won't have these big leaps anymore.
Yes, I mean, you already see this here. Like this from here was big. This from here was big, but not as big as before. And this from here. And this now, this will be less big than the cycle here, probably.
Right.
My issue with investing in Bitcoin is that, like on the last slide there, the cornerstone of any fiat currency is stability, and general acceptance. Like you have on the last slide, you had general acceptance, which Bitcoin doesn't have at the minute. And the two of those, I think, go hand in hand. Why would a currency become generally accepted if the stability isn't there? Like if I was selling cars and you said I'd give you 1 Bitcoin for your car, why would I say yes if the possibility for me, for what you pay me in Bitcoin today, is going to be half or worth nothing tomorrow? You know what I mean? Like they kind of go hand in hand, and I don't really see, from the perspective of shop owners or any business, why would I accept it?
Mm-hmm.
You know, when there is, you're not guaranteed stability. I know you're not with fiat currency, but it's a lot less. The relative movement from one price to the next price is a lot more small. It's a lot smaller than what it is in Bitcoin. You know?
Agree. What you can see here is over 4 years, Bitcoin always went up. If you can hold it for 4 years or more, Bitcoin always goes up. So you have this guarantee partially. And for example, Elon Musk now accepts Bitcoin for Teslas. He will just hold the Bitcoins.
It's not really a current, like it's not really something that if you invest in it, it's not really, well, some people do it as a short-term, trading, but it's more for long-term investment, right? Where you hold it.
Yeah, and also I think what you said before about the 0.2 to 0.1, like over the course of time, that volatility will go down a lot, which makes it really interesting to invest in 10 years ago, and still quite interesting right now, but not as interesting as 10 years ago, and far less interesting 10 years from now, when it will be like investing in the US dollar. Like, I don't know, am I going to change my euros to dollars? I don't know, maybe it will go up, maybe it will go down, but not by a lot. And that will be the same thing 10 years from now with Bitcoin, right?
Exactly.
Good. I have a question. Just a simple question. Why Bitcoin and not other crypto coins? There are so many now.
First is the first mover effect. Bitcoin is just the first one. Bitcoin has a big community around compared to like other cryptocurrency projects, but there is always the possibility there that Bitcoin will not be the currency of the future, but maybe Ethereum, maybe, I don't know, Cardano. Dogecoin, exactly.
Obviously.
But yeah, it's not guaranteed that Bitcoin will be the winner. But at the moment, it looks like, I mean, at the moment, Bitcoin is the first and the most valuable. Good.
Yeah.
So, yeah, some questions that need to be asked. Do I need to pay taxes on my Bitcoin? For a lot of people, they don't know that. Yes, you need to do that.
But only when you cash them in, no? Because why would you pay taxes on something that might change from one day to the next?
Depends on your country that you're from. But for example, if you are resident in one country and then you move to another country, let's say you're from, when I say from Australia, because I don't know the French tax system inside out, but if you move from Australia and I've become a resident of Australia and become a resident of Bulgaria, then that creates a capital gains tax event. And thankfully, the government says, if you would ask them, the price of your assets when you left that country versus the price of when you bought those assets, we tax you on that part. We don't care about what it moved after you left the country, but for as long as you were a tax resident paying tax, that's effectively where you pay tax. And then the change in the value between when you became resident in Bulgaria and the current value where you sell is the amount of tax you owe for Bulgaria. So for example, if I bought Bitcoin 10 years ago, I've been living in Bulgaria for a year, Australia would claim 9 years of that change and Bulgaria 1 year. So you have to pay to both countries. But depending on what day you moved and the exchange rate of that day is the point. I think most countries have a similar kind of view.
But that's a bit weird because it's not a liquid asset. Like it's really, I mean, you might sell it when it's crashed and then you will have paid taxes on like.
And that's possible. I've actually had that situation where I had a couple of gains tax event happen to me and the actual assets fallen after that and I paid one tax and I earned in income. But that is the tax system for most.
I believe you have to ask an accountant. There, it's not that easy. I can't explain you that because I just don't know. But it's in Bulgaria. It's 10%. That's the thing. Where can I buy crypto? I usually recommend Coinbase.com is easy to buy if you like. A lot of people have Revolut. You can also buy there, but they have 1.5% fee for each transaction, which is pretty high. So be aware of that. There's also Kraken, which I used. Is my money safe on exchanges? The thing is, exchanges can always get hacked. Like Mt. Gox, there was a big exchange almost 6-7 years ago. They got hacked, and all money was just gone. They couldn't. Everybody who had money on there was gone. So if you can't afford to lose it, move it. If you just have $100 on it and you don't care about these $100, then leave it on, no problem. Should I invest now? And I'm not gonna give investment advice like before, but what I'm gonna say is Bitcoin is increasingly in danger territory. It already did almost 10x since a year or 1.5 years ago. So 10 was around, it was very low, already did 10x. And let's see how long it takes until we have the market cycle top. Good. You want to get more information about Bitcoin? We have Anya here. Anya was a member of Coworking Bansko. She's now in Istanbul. She has a YouTube channel for beginners, where she explains what's a wallet, how to buy crypto very easily on a YouTube channel. I can only recommend her. She will probably come back in May, I believe. I'm not sure when exactly, but she will come back. If you want to get some more technical stuff, then
time for the 100K Bitcoin party.
There is Andreas Anopoulos. Please correct me if we have a Greek in here. He has also a YouTube channel and is more technical, more deep, and more into detail. There's a good book, The Bitcoin Standard. This book doesn't talk about technical stuff, but more about the financial, the the economy and what is money, like more or less what I explained here in this talk, which is very interesting. Can only recommend. Yeah. And now, if you don't have any questions anymore, then we can go into the quiz. Good. Please, everybody, get a pencil and a piece of paper. Just give it a run. Somebody doesn't have a piece of paper. And also, yeah, you don't just need one piece of paper. That's enough. You just need to write down something. And please put away all phones. And also, please close your laptops for a moment if that's possible. No, the thing is, you could look it up.
Of course, but why would you?
I'm gonna ask for a Bitcoin price at a specific time, and what you should do is just write down your estimation of the Bitcoin price at this specific time, and the one that is closest to this Bitcoin price gets the coin. Same happens in the lounge at this moment with Maria. Okay? Any questions before we start? So, question is, what is the price of one Bitcoin, or what's the price of one Bitcoin at the 13th March 2020 at 4 o'clock, 4:30, 4:29 UTC in the morning.
March was one.
Was it
What date was this?
13th of March.
Pandemic.
For weekday was this? Can I look it up?
No.
Just a weekday.
Well, I can tell you it was rather low. But it was about, yeah, it was around a year ago.
Is that the lowest point of the drop?
Who knows?
No, I think not.
I will confer with my consultant.
just write it down somewhere. Do you need paper and pencil?
Right.
Good. So as soon as you're ready and wrote it down, please give it.
Should we write our name on it or?
No. Just write it down.
Sure, we can just do it.
I don't have pencil.
Do we hand them up or?
No, not yet. I will show the result as soon as everybody wrote it down, and then the one of the closest can hand it up, and then I will determine who is the closest.
I wrote it down in euros.
No, it needs to be in US dollars. That's important. I've converted. Put a US dollar number on it.
How do I convert it?
Get the rate
It's difficult because
1.2 approximately.
Yes.
Divide by 1.2.
Yeah, but at the time it wasn't. The 13th of March, the euro was about 1.
Because I check in euro and not check in USD.
Yeah. Well, the people also want to write it down.
If you win,
Just.
You got to like 101. Yeah. March was the euro was basically parity as well. And then it went from like 1.32 to like 1.25.
I have only like the numbers.
I'm a loyal team now.
Today, but
Everybody ready?
Yeah.
Yep.
Good. I need to text Maria.
The number?
Just so we are in sync and everybody's already there. Good. So it's 4,185 US dollar. It was 1 year ago.
It was
And now we are at 58
I
thousand.
remember that day.
So we are basically
Stock market
times
crash,
15.
And I was just
Yes.
like buying stuff.
Are we already? Good. Is somebody close to this?
Starting is winning for sure.
That's up here.
Good. How much do you have?
39,000.
30,
3,900.
3,900?
4,236.
4,236. Very close. Somebody closer? Somebody closer?
4,300.
Oh, okay. So Camille's closer. When there was people here. No? Okay.
Yeah, it's a bit
You're
closer.
closest,
Okay, good. Congratulations. One Bitcoin for you.
Thanks. Nice.
Yeah.
Yeah.
Good. Thank you very much for listening to the talk.
Was that the lowest you got?
There was. I don't know if it was.
It's a bit lower.
I thought it was like a dip below 4,000 at some point, but
A little bit.
yeah,
Possible. Interesting. Yeah. If you have more questions, I will be here after. Yeah, thank you very much for staying.
Thank you.
I have to put up the co-working.